morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's a Friday, but it promises to be an interesting one. Markets have done well over the last 5 or 6 trading sessions, and they're at important resistance levels as well. I'm Prashant, with me, my colleagues Surabhi and Nigel. Guys, good morning.
Morning.
Hi, morning, folks. Thank God it's Friday. You know, I was just thinking, reading the global headlines overnight, all those conversations in the meetings and the meetings after the meetings of the White House, but the missiles are still flying in Ukraine. So not too much of a positive outcome, at least not yet.
That's right. Not good for humanity, not good for the markets as well. And hopefully, end of all wars is something that you're looking at. Economic or non-economic factors at play. But you want these wars to end, right?
Absolutely, 100%. But it doesn't look like. I mean, the path to some kind of peace agreement, etc., seems a little thinner now. And we'll tell you why. But let's just take it from the top. It's interesting, right? It's completely flipped. And S&P is down for 5 days in a row now, including yesterday. India is up 6 days in a row. But the point is, S&P was up for 6 days in a row, and India was down for 6 days in a row. So it's just a little ahead, a little behind, and leading, lagging, depending on where you start. That's the kind of price action we are looking at. Now, U.S. equities, S&P down about 0.4, NASDAQ was down about 1/3%. Some data points came through. The S&P Global Manufacturing PMI is now at its highest since 2022. There were some hawkish comments from one of the Fed members. They remain focused on inflation. It's not. We've heard this before. Majority of the Fed July FOMC minutes basically showed that it's inflation over unemployment and labor market at this point in time. And this is interesting as we head into that September meeting. We, by the way, will hear from Fed Chair Jerome Powell because he speaks tonight at the Jackson Hole Symposium. And if you think about it, if you're waiting for a clear, definitive indication tonight about what they will do in September, what's the incentive for them to do it, right? They've got every incentive to kind of sound neutral as they go into the September. So if you're expecting a big Q one way or the other, I don't think that's going to happen. Dollar index was up 0.4%, 98.6 now on the dollar index. And oil prices also, they've been largely over just look at the last 6 days, right? +1, -1, but we're back at about $67.5 on oil prices. As we were discussing earlier, there are doubts which seem to be growing with regards to the road to peace, the path to peace between Russia and Ukraine. If you must have read those headlines that Trump has basically pulled himself out of this situation for now, at least for now, by saying that let them negotiate and I necessarily don't have to be a part of it. We don't know if those are reports on the back of some indications that the White House has got that, you want to be in a situation where perhaps there is visibility of success. And if the visibility of success is dimming, we don't know what's going on behind the scenes. But there was this report, the detailed report from Reuters, and this is all sourced basically, but they essentially said that Putin wants Ukraine to give up all of eastern Donbas region, renounce ambitions to join NATO, stay neutral and keep Western troops out of the country. And then he's agreeable to talk peace. This is not new, but the report essentially frames it in the sense that Putin has kind of come back or dropped demands for more territory, but he still wants some. And of course, no NATO, etc., which has been non-negotiable. He's called it a red line, etc. So we'll see. By the way, related to this, the Trump tariff deadline looms, which is 27th of August, which is the coming Wednesday, next week, by the way, which is for that additional 25%. And there was more of the same in terms of commentary from top trade advisor Peter Navarro last night. And again, sort of calling India out and how India is profiteering, buying cheap oil, refining it and selling it back to Western Europe and sort of other parts of the world. So nothing new in that sense. We've got a soundbite. We'll probably play that out for you a little later. So not very much has changed in that sense from a global perspective. Now I'll just come to the local levels here, Nifty Bank. So we yesterday at the day's high almost got to the 61.8% retracement, which is 25,160. I think yesterday's high was 25,153. So you almost got to it. So the resistance now is that level, 25,160, of course. And 25,255 is basically a swing high, which we saw. I mean, if you just go back the last 2 months or so, and it's a region where the market's found a fair bit of resistance. So that's broadly the resistance zone in the very near term. Support stands at 24,925. It's moved a little bit. It's the 40-hourly exponential moving average. It's moved up a little bit, so closer to where we left off. The Nifty Bank is slightly weaker. I mean, just on a relative sense, it's not been doing as well on days when the Nifty has done well. It's retraced, by the way. The Nifty is retraced 50%. It's at 61.8. The Nifty Bank is retraced only 38% of the decline. Here, the resistance is 55,915. And then the 50% retracement, which is 56,267. And the immediate support is the gap area between last Thursday and the open this Monday. 55,472 is the high on Thursday, and 55,577 is the lower end of the range on Monday when we started this week. So that's basically technicals for you, levels for you. GIFT Nifty gives you a quick sense of how we are likely to start. It's down about 70 points. 6 days in a trot, the markets looked strong. So I think it's agreeable, right? Has to be agreeable. About 70 points low. We'll see how things pan out as we kick this off. Nigel, F&O.
Well, yesterday, the weekly expiry actually went to the bulls, but it wasn't very, very convincing because we ended off the high point of the day. However, for the week itself, Prime Minister Narendra Modi's GST rationalization promise and the S&P upgrade has worked well because the Nifty will be performing a little better or in line with what the rest of the globe is doing. That is this week so far. Year to date, actually, we're underperformers, but that catch-up trade is playing out, and that will be heartening from a bullish perspective. But when we're ending higher, it's clearly, signs are visible with regard to the short covering bounce that we are seeing. So even in yesterday's trade, the Nifty, well, there was 5% of open interest that did come down, while the Nifty Bank, only 0.5% was down. So the shorts are still holding on to their positions in the Nifty Bank. So that will have to do bulk of the heavy lifting from here. And yesterday's trade, tallying with what we saw for the market on the whole, the FIs as well, they covered some short positioning. So the shorts, in percentage terms, continue to remain at around 85.5% or around 90%. But in absolute terms, it's come down. And if you pull up a chart, you'll see all through the week, there has been some short covering that we have seen. So from the peak of around 1.85 lakh net contracts on the short side, the FI short positioning has come down to around 1.68 lakh contracts, telling you that 10% of their short positions have covered out so far, and that's helping us move higher. Moving to the options data, 25,100 call. Well, good amount of open interest built up, 25,000 put as well, a fair bit of open interest built up out there. And the premium over here is around 150 rupees on an average for the day. So that's why the resistance mark, if you add that 150 to 25,100, 25,250, that's the important mark. Actually, it's a bit of a band because yesterday we went to around 25,150 and that level got rejected. And going by the options data, the 25,250, that's going to be the important resistance mark. While the reference point on the downside, going by the options data, is at around 24,900. So the good news is the Nifty Bank has taken off all the technical levels, 20, 50, 100, 200 DMA. However, the Nifty Bank is unable to do that. So though the Nifty has taken off all those technical resistance levels, the Nifty Bank is still facing resistance in that vicinity of around 20 as well as the 50 DMA. Moving to stocks then that we're looking at, we had alerted you yesterday. Titagarh could possibly come out of the F&O ban. It's out of the F&O ban. So I'll keep an eye out on this stock. There is some good fundamental news as well that's come in there. So that's the stock on our radar. And telecom has suddenly started doing well. And now there are hopes with regard to Vodafone Idea. So the stock that we'll be looking at is Indus Stars, has underperformed in the last 1 month, but that's a stock I'll keep on my radar.
Well, it's been a good pullback by the Nifty. 700 odd points from the lows. The low that we hit was on the 8th of August. And from that level, the market's had a decent pullback. Does it have the steam to go on further? You saw the implied open just a while back. It's 70 points lower, which is a bit of an outlier because other Asian markets actually are holding up this morning. So once again, let's see if India can continue on the green path or not. That's the rest of the picture. Japan this morning has got very hot inflation data. Despite that, the market's doing well. China's doing well as well. But let's see if the bulls will pause for breath here in India. Well, we've got with us Conrad Saldana, Managing Director and Portfolio Manager at Neuberger Bergman with us. Conrad, thanks so much for joining in. Good to be speaking. There's so much moving and shifting. And, a bunch of positive domestic news flow, I think, gave some relief to the bulls here in India. We're talking about the GST relief, good monsoons, and generally expectations of a good festive season here. But how much of that is already now in the price? Like I mentioned, the markets rallied about 700 points from the lows it hit earlier this month. Your thoughts?
Thanks, Ravi. Yeah, I think we definitely needed maybe the Independence Day speech and some more stimulus, given that consumption has been really soft, right? And it comes down to earnings, because India, despite the underperformance you've seen, and it's pretty stark, right? You've seen a 12-month underperformance of almost a double-digit, close to 20% versus emerging markets. And that's driven partly because valuations are not cheap to begin with, but it's been a growth market. And that growth element has kind of faded. You're seeing EPS growth hitting 5% last year. This year, we're looking at 10%. It's going to be more back-end loaded. So you've got to have to see that earnings growth come through, and more from the domestic side, because frankly, you can't rely on the export front, which is also smaller for India in the first place. And given the noise with tariff, I think people are looking for a lot more help, especially in rural, especially in consumption-related areas, which you saw a bit of relief bounce with these share prices, but you got to sustain that, and it has to come through in earnings, Subi.
Absolutely. So what's your positioning, Conrad, on the Indian market right now? Neutral, overweight, underweight, and how does it stack up versus some of the other regional markets that you're in?
So India has been an overweight for us for a long period of time, but a smaller overweight, given that the performance of the market historically had done well, and we didn't find as much of a valuation upside. We have been buying into it when you had those sharp declines, especially in the mid-cap side. But it really comes down to the stock level for us. So we're looking for good domestic companies. I think that whole sales pitch of China +1, seems to have reversed into China -1 right now. But there's so much of domestic impetus on CapEx spending that's coming through. I think the government softness on CapEx, that hiatus, needs to come back. But you're seeing the private sector coming through and delivering and building up their CapEx, and that's what we can pin our hopes on for. So names like, I would say, Jyoti CNC, right? Whether it's giving CNC equipment to Apple, but it's much more for the domestic market. Leave aside the whole export factor on Apple trying to ship out. You're seeing Shyam Metallics adding a lot of aluminum foil capacity. So there's some good triggers for these businesses where you can see the earnings. So first, it comes down to you got to pick the right stocks. It's not just a rising tide raising everything else, and that whole SIP bull run that came through. It's going to be a lot more picky and picking the right names, and I think the domestic side is starting to look pretty good. But it comes down to earnings, Ravi.
Yeah, no, absolutely. Conrad, morning, Prashant here. $55 billion through local investors, even as FIs have sold about $13.5 billion, right? That's just this year. So you're still kind of sort of backing industrial names here. That's the story, and you're saying, well, that push from the government needs to come back. One area which we've spoken about in the past is hospitals. Has seen a complete re-rating. I think Max was on your radar. How do you think about valuations here? And does one rotate out of something into something else? Or it's last 1 year, 1.5 years, even laggards like names like HCG, etc. have re-rated. Narayana Health's cheapest is a lot, but still, that's over 50 times now in terms of earnings. What's your sense?
So when I talk, Prashant, to your question on broader capex, I'm not looking for big, heavy capex, right? So these are much more niche businesses that are adding that capacity, and they're not looking for major spend that has been slightly slower to come about, right? Given elections, all this other stuff, especially from the government standpoint. To answer your question more on healthcare, I like the domestic healthcare stuff. It's defensive. Absolutely agree with you that there was a point in time for us when we look at on a cash flow EBITDA metrics, you could buy them at 15, 17 times earnings. We probably owned a handful of these companies. I still think Apollo Hospital looks interesting. It's definitely on a valuation basis. It's a discount. They are focusing on operating efficiency. Their bed ramp up, maybe not as high as someone like a Max in terms of new capacity, but it's pretty good. So I would say that still looks interesting. We've owned JB Chems for a while. Now that's in a bid situation with Torrent. But again, domestic business, you look at the earnings coming through is good. I'm not relying entirely on where this whole Section 232 sector tariffs start to come in. That's going to create a bit of noise. But they're executing, and I think people want wants security in a very uncertain global environment. And I think that's why the hospitals do well. I agree on multiples. They're not as conducive as they were, but you got to pick within that space.
All right. Hi, Conrad. Good to see you in after a while. What about tech? That's a space where you are selectively looking in. How are you all positioned on tech? The problem is tech has underperformed. But in the last couple of weeks, it's been showing like at least it's the place to hide. The problem is downside could be protected, but you may not make big returns from here. How are you all positioned on that one?
Fair enough. Nigel, good to see you again. I think so. I look at tech globally as well, right? So I would say on the hardware side, something like a NetWeb, I think, is more basic in terms of its data center assembly business. I like that. I like, Dixon's multiples aside. I know we spoke about multiples on the hospital companies, but I think these are good executors. They've got a long runway for them over the next 3-5 years. On the services side, I've been suspect for a few years now. And you've seen that growth really start to fade, even before a lot of what potentially could be on the tariff side. Do we start to pivot, in the US and look more at services? But you've seen that AI disruption, and we are big investors on the AI front in hardware, whether it's on the GPU side with the NVIDIAs of the world, it's ASIC, etc. That's going to be disruptive for sure. And the billings have been softer, but the smaller companies, to be fair, have done well. I mean, I would say like a Coforge is executing. You're seeing persistent. So you're seeing a few niche businesses. I would say Hexaware that listed recently. But for the bigger guys, it's a bit of a challenge, right? How do you overcome that growth slowdown? Hirings haven't really accelerated. You look at even the compensation structures haven't really progressed for a while. So you've got to pick and choose again over there. But broadly, I would say IT services is an area that's going through adjustment, and we're not sure how this AI impact is going to happen on these businesses, which might be good in the longer term, but in the near term, a lot of the capex, to be fair, when you speak to BFSI and companies in the US, they're spending a fair bit, 20-30% on AI.
Yeah, no, absolutely. And of course, I mean, some companies have been spending hundreds of millions of dollars on individuals, right? Meta
Prashant, your point, I mean, is a valid one. I mean, I look at the numbers and just adding it through, and you think of the hyperscalers, $50, $80, $100 billion. That spend is the biggest contribution to US GDP potentially in the second quarter of this year already.
No, the biggest gold rush ever. I don't use that word lightly. Thanks very much, Conrad. It's always great to have you with us here on the program. Appreciate your time here, as always. Let me just quickly run you through the interactions which are lined up here on the program. So 8:35, Siddharth Bhamre of Asit C. Mehta Investment Intermediaries joins us. We talk about the SEBI sort of potential hammer coming down on the weekly options segment. Stocks sold off hard yesterday. And that's our story, by the way, which we put out early August. 9 o'clock in the morning, Vijay Agarwal of Equirus will be speaking to us on the trends in real estate space. 9:20, Sanjeev Prasad of Kotak Equities runs us through how he looks at valuations now. 9:35, the management of Hoodco talks about demand trends, outlook for FY26. BS Ajay Kumar of Healthcare Global will be speaking with us at 9:45 about their outlook for FY26. Towards the end of the program, it's a special segment. It's the economy. Latha in conversation with S. Ganpati of Gokula's Exports, Sudhir Sekhri of Apparel Export Promotion Council on what textile sector would want from the government to tide over the 50% tariffs.
Time to slip into a short break. Got a lot of stock-specific action tracked for you. We get to that in just a bit in our special Top 10 segment. We're looking at Wipro, Vedanta, R Systems, Piramal Pharma, Titagarh Rail Systems, Texmaco Rail and Engineering, SJVN and PDC Industries. They'll all be reacting to positive news flow. On the flip side, Apollo Hospitals and Hickel will be reacting to negative news flow. Take that break, come back. We'll get into further detail on all of these names.
Welcome back. So it's a bit of a different morning because the implied open is telling us that our color is red, but otherwise Asian markets have been green. So maybe the bulls take a bit of a breather. They've had a good run so far. Markets up almost 2.5% at an index level. So perhaps start off on a bit of a consolidation note, and then we see if the day gets better from there. Our team is standing by with a list of stocks to watch this Friday morning. So let's straight away get to it. Guys, morning to all of you. Rima, Wipro has done an acquisition. There's such spotlight on IT companies, right, that they need to do something to shake up growth. What's this about? What's the company?
Well, let's run you through the details. Wipro has acquired a company called Digital Transformation Solutions, DTS, which is a business unit of a company called Harman, which is a Samsung company. Wipro will be paying $375 million all cash for this acquisition. The EV to sales is at 1.2. Now, this is not very expensive, but DTS has not grown for the last 3 years. The acquired company's revenues should come up for you on your screen. In calendar year 2022, the revenues were 315, and even in calendar year 2024, the revenues were exactly 314.5. So revenues have not grown. Also, margins are likely to be lower. In fact, the company's indicated that there could be a margin hit on account of integration costs and a higher on-site presence. That said, analysts are still fairly upbeat because, one, it adds to their revenues. It will add, once completely integrated, you get a full year's benefit. It could add about 3%. And secondly, it expands their capabilities in ER&D, which is a fast-growing space. So there could be, maybe a bit of a, EPS hit on the back of this acquisition, but it's a capability boost and it does add to the company's top line.
Okay, all right, Rima, thanks for that. Well, let's hop across to Vivek. He's here to tell us about Apollo Hospitals. We're expecting a large trade out there. Vivek, tell us more.
Well, good morning. That's right. So Apollo Hospitals expect a large trade. So what we understand from our sources is that one of the promoters, Sunita Reddy, is looking to sell close to 1.25% of the total equity. Remember, the total promoter holding, including all of the promoters, is slightly in excess of 29%. So the total quantum of this particular block deal could be in the range of 1,400 crore. And the floor price is at a minor discount to yesterday's close at 7,747 rupees a share. There is a lockup on further sale of shares of 90 days. So expect a mild red as far as Apollo Hospitals is concerned today.
Okay, all right. Thanks a lot for that, Vivek. Well, I'm looking at Vedanta. Stocks in focus. The board has approved the second interim dividend of around 16 rupees for FY26. This interim dividend amounts to around 6,200 crores, and the promoter entity, by way of holding close to 56% stake in the company, they get around 3,500 crores. Now, this is good because it fulfills this year's obligation with regard to Vedanta Resources, and it helps in deleveraging the parent Vedanta Resources. So this is positive because we're only halfway through the year, but almost the entire fiscal's obligation at Vedanta Resources, the parent has got fulfilled, which is a bit of an overhang on the stock normally. Last 1 year, if you look at it, Vedanta as well as Nifty more or less flattish. But Vedanta has given dividends of around 55 rupees. That amounts to around 12% yield. So that's why it's been a dividend-paying machine. If you just look at that dividend that they've been paying, and Citi, they retain their buy rating. For the year, they are factoring in 40 rupees per share of dividend. Already 23 rupees has come out. They say, though, that concerns around the demerger delay, that could keep the stock range-bound in the near term. But dividend bonanza coming in for shareholders. So expect the stock to open up with some green. Well, let's hop across to Vinny. She's here to tell us about some stocks in the news. Vinny?
Hi, good morning, Nigel. So let me start with our systems. We're expecting green. Why? Because they've acquired a company called Novigio Solutions. This is for 400 crores as the cash consideration. Plus, there's going to be a stock-linked EBITDA performance amount that they'll be paying as well through the year. So that is something that we'll be keeping an eye out on. Now, they expect this acquisition to be EPS accretive, since the first year itself. Looking at the financials of the company that they're acquiring, revenue for Novigio was around 264 crores on FY25. They've seen a very strong CAGR growth over the last 3 years of 44% as well. And 25% is the EBITDA margin. So no concern on that front. EPS accretive and green expected for the stock. Piramal Pharma now, in partnership with New Amsterdam Pharma, they have upgraded one of their facilities in Pennsylvania. Now, this is their specializing. They've opened up a special unit that you could say that is coming in for oral solid dosage. So that will give them an efficiency in terms of producing these dosages as well. So that's why we are expecting green here. Other than that, Titagarh Rail, that's the other one we are keeping an eye out on. They've got an order or letter of intent from Garden Reach Shipbuilders for around 467 crores. So green expected here. Texmaco Rail also will be in focus on the back of an order win of around 103 crores for BCBFG wagons as well as BVCM wagons as well, vans as well, that will be producing. And this order will be delivered within 10 months. So keep an eye out on that.
All right. Vinny, thank you very much for that. More stocks with news flow. Ria is here with that list. Ria, morning.
Well, yes, morning. Let's take a look at SJVN first. Positive news flow on this one. The first unit, which is 660 megawatts out of the total 1,320 megawatts of the Bazaar thermal power project, has been successfully synchronized with the national grid. And with this, it is expected that this will enhance the company's total energy generation capacity as well as further strengthen the energy portfolio of the company as well. And the total project is expected to generate about 9,828 million units of electricity annually. Moving on to Highcal, negative news flow for this stock. They've received a warning letter from the US FDA for the Jagani unit at Bangalore, which was inspected between the 3rd and the 7th of February in 2025. The last stock is PTC Industries. They've bagged an order worth rupees 110 crores from BrahMos Aerospace for the supply of critical titanium castings, and the execution period for the order is 24 months.
Okay, all right, got it. Ria, thanks very much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow this morning would be Wipro, Vedanta, R Systems, Piramal Pharma, Titagarh Rail Systems, Texmaco Rail and Engineering, SJVN and PTC Industries. So lots of green today on the list. Only 2 stocks in negative territory, Apollo Hospitals as well as Hikal. Okay, so that's the stock list of the morning. Let's find out what's happening in the world of commodities. We have Manisha joining in with the latest. Manisha, hi. Of course, it's going to be all about Jackson Hole and what is said and what's not said in the next, I think, 24 hours. But overnight, I mean, what's hot? What's the latest?
I'll start with the crude oil prices, Survey, because we've seen a percentage point of gain overnight. And with that, I mean, last 3 days actually have seen constant gains. And we are headed for a weekly gain on this one. And this is after 3 weeks of decline that this week is standing tall. Well, a couple of things. One, of course, is the uncertainty on the resolution to the Russia-Ukraine war. Every time there's a meeting, it's followed up by some more stronger attacks by either of the countries, and that doesn't augur well for the crude prices. Apart from that, it is also the strong U.S. demand, because when you look at the U.S. inventories, the previous week has seen a decline of 6 million barrels. That has been supportive. It also has to do with the Peter Navarro statements overnight, and international media seems to be taking cue from that India is buying Russian oil and India doesn't want to recognize its role in bloodshed kind of statements also seem to be adding some premium to prices. But as you said, it is going to be about the Jerome Powell's upcoming remarks at the Jackson Hole. That is in focus right now. Powell will speak on economic outlook and the Fed's policy stance. Ahead of this, we've seen strength in US dollar index, and that in turn seems to be weighing onto the metal prices. So whether it is gold or silver, those prices have softened, and metals in any case seem to be ending this week on a weaker note. So whether it's copper trading at a 4-month lows, zinc at 2-week lows, aluminum near 2-month lows. So it's not great moves that we've seen happen in case of industrial metals right now.
All right, Manisha, thank you very much for that. Well, some brokerage calls of the day. Who's saying what as far as brokers go? So Sudarshan has got details here. So good morning.
Morning, Prashant. So I have 2 stocks, GMR Airports and Alchem Labs. So first one, GMR Airports. If you take a look at the stock move over the last few months, you will see that stock normally finds tough to cross the level of 100. But now today, Citi has come out with a note. It has maintains buy call, increased the target price to 103 from rupees 90 per share. And it's raised the target price mainly because it believes that there would be a strong midterm growth, especially in the international business segment. And the growth is going to be driven by, first, potential resumption of China and India flights. Second, Indigo, which is one of the biggest airlines, is going to increase its Airbus orders to 60 and may further increase to 100 as per media reports. And third is upside to Delhi's commercial land value. That's the reason Citi believes that share price momentum is expected to continue in GMR airports even in CY26. Now coming to Alkem Labs, Nomura's note is there. It maintains buy call and target price is rupees 6,300 per share. Remember, Alkem Labs is one of the pharma companies which had reported a strong set of earnings in Q1 FY26, mainly because it's against all the other pharma companies, it's India concentrated. And Nomura believes that valuation is reasonable given recovery in domestic growth and prospects of Enzene. And also it has gained traction in recent launches in anti-diabetes after patent expiry. And on the Enzene front, it believes the revenue for this is expected to rise to rupees 800 crore in FY26 from rupees 360 crore that company had reported in FY25. So that's the reason it's positive.
Okay, all right, Sudarshan. So we'll keep both of those stocks on our radar. Yesterday, the brokerage notes that stood had pulled out. Both the stocks had moved. Hexaware was one, and I think there was also another one on the Nifty. But we'll take a quick break on that note, come back on the other side, and we'll have Siddharth Khemka of Motilal Oswal Financial Services joining in for some fundamental stock ideas. And then the big story, these rumblings on the F&O market and perhaps further tighter regulations ahead. What could the implications be? Yesterday, we had a big sell down on a lot of capital market stocks. Siddharth Bhambre of Asit C. Mehta will join in with some perspective.
Okay, welcome back. There's 30 minutes to go for the pre-open session to kick off. GIFT Nifty is indicating a slightly lower start. Well, the big story yesterday, of course, was a confirmation of something that CNBC-TV18 put out early August. SEBI Chairman Suhin Kantapande on the sidelines of the FICCI annual capital markets conference saying that there is a need to increase the tenure of equity derivative contracts. Basically, our story, 5th of August, was this, that, the regulator, in sort of consultation with the government, Ministry of Finance, may look at moving these weekly contracts, weekly option contracts, which is essentially the bulk of volumes, options volumes, and options are 90% of the market. And the weekly may actually not remain weekly anymore. They may be replaced by, fortnightly, or maybe even monthly now. So the confirmation coming through from the SEBI chairman. Just want to play out a quick soundbite and then we'll get into a discussion.
See, improving the tenure really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
And we'll have a consultation paper
yes,
coming?
yes. Nothing will be on.
By when should the consultation take?
No, I mean, I can't
is
give
it
you
like
the,
in a month, in a week?
No, I can't tell you that, but that's the thinking process we have.
But your preference is for a longer.
Yes, I mean, that is qualitatively we have to see, but we have to calibrate it. So if you really look at my statement, where I said in a calibrated manner.
Okay, all right. Clearly, it got all those, those stocks that are market-related nervous yesterday. And we look at the F&O basket yesterday. BSE, there was a big open interest built up. The stock ended down with a cut of close to around 8%. However, by the end of the day, the open interest build-up was only around 2.5% approximately. So there were some shorts in the system, but not massive. During the day, there were massive shorts. Sometimes you like shorts in the system because if there is some good news, then it could cause them to burst up. There was some cash market selling is what I presume yesterday in BSE. On Angel One, in fact, there was unwinding of long positions. Let's get MCX first. On MCX as well, similar case out there. The stock was down close to around 3.5% approximately. And open interest build-up wasn't massive. It was around 2.5% approximately. While on Angel One, there was clear signs of unwinding of long positions because the stock ended down with a cut of close to around 6.5%. But open interest was down sharply. I think it was down close to around 8% on that sort of a base. Yes, close to around 2 lakh shares getting a shed on a base of around 21 lakh shares. So clearly, there was big pressure that we saw in yesterday's trading session. Let's welcome our guest, though. We have Siddharth Bambre, Head of Institutional Research at Asif C. Mehta Investment, who joins us on the show. Hi, Sid. Good morning. Good to see you in after a while. Tell us, what is your take on this? Exchanges clearly are nervous with regard to these changes that could come about. According to you, what is the volume hit if these changes come about?
Good morning, Nigel. Always pleasure to have to be on your show. Now, this topic of derivatives is close to my heart, and I have very strong opinion, but I would like to put it as mild as possible. So, to answer your question, if this happens, then we might see a dip in volumes because there are a lot of people who are now full-time employed in market, and their earnings come from trading on weekly options. Needless to mention, SEBI report is also out that most of these people end up losing money. Nevertheless, volume would take hit. I want to say that 10 to 15 years back, our derivatives market was more evolved, where we have dated securities. I mean, say dated long contracts, not just monthly, but in options and futures of index, we had 1 year, 2 year, 3 year contracts, and we had wonderful structure products in market, which has all disappeared. So I think we didn't evolve, our derivative markets didn't evolve in last 10, 15 years. In fact, it has taken more of a quantitative approach. If you look at India's market cap, listed market cap is 5% of global listed market cap. But our derivatives market is the largest market by very high margin in this world. So structurally, our markets were not right. And I hope that, we go back again to those days, 10 years back, and probably evolve further. And yes, volume would take hit if we go in that direction. But volume is not everything. People need to trade well.
Siddharth, allow me to come in. Morning. What is the hit to volume, according to you?
It would be substantial. Firstly, we need to see, Prashant, that whether we are doing away with weekly for everything or, for few index only, whether we are coming out with a fortnightly or only monthly. Because if it's fortnightly, then the hit would be probably less. But if it's only monthly, then it would be significant because people are trading day in and day out. And generally what happens in a monthly option, if the volatility is not significant, the time decay, the volatility don't move the premiums much. At least time decay doesn't move much. And that would not make daily trading viable for option traders if markets are not giving any directional move. So obviously, if there is no volatility, volumes would come down irrespective of the capital or the capital constraints.
Yeah, Siddharth, hi, morning. Your overall point was interesting that you used the word we were a more evolved market 10 years ago because you had deep out of the money options, you had products which could go on for very, very different time durations. So as someone who's been in this market for so long, I mean, what is it that you're actually advocating for? You're saying that take the near-term hit. But I mean, don't a lot of other global markets also offer weekly or fortnightly products. So what is it that you are advocating should be the path forward? So we do have a deep, evolved and a mature F&O market. And a safe F&O market, may I add?
Yes, yes. See, purely from risk management perspective, our markets have evolved. Credit to risk management stuff over there. But from products per se, I think we are not evolved. And what I've been against weekly options, but not probably perpetually. But our market had not evolved. If you look at today, also most of our trades are in index options, and that too in weekly. Monthly contracts hardly see any open interest. Look at what is happening in stock options. Barring 5-6 large cap stocks, there's hardly any volume in stock options, and we see recommendation coming on illiquid stock options left, right, and center. What I suggest is, I understand there are compulsions now. Mutual funds are launching SIF where 25% of the portfolio can be on the short
is
side.
Possible, yeah.
This is all structured, Surbhi. Means I don't want to talk more on that because I might say something which I should not. So that's the reason we are seeing now that regulators talking about we should have long dated options. I mean, what took you 10 years to understand that people are losing money and the structure of market has been spoiled? So it is.
So basically, instead of near-term speculation, instead of near-term weekly speculation, you're saying that having longer dated options perhaps would be the way to go.
Yes. We go back to monthly. We go back to all those dated options, 1 year, 2 year, 3 years. So if you remember, there were so many bigger companies which had beautiful structure products where we used to have participation in nifty dip. So all those things should come back, and eventually when market get matured, then probably selectively you come out with short dated options also.
Like in the market, there are two people on each sides of the trade. On this topic also, there are many people on both sides of the trade, both sides of the argument. And we'll get you as much opinion as possible. That's what we can do. So that stay with us, right? I mean, here, of course, we're talking about a little bit of here and now in terms of the impact on these listed capital markets plays, because, I mean, options and the options volume has been such a big part of it. How are valuations looking, right? BSE, Angel, I think there's a UBS note on this as well with regards to BSE. Vamakshi standing by with all that. Vamakshi, morning.
Well, good morning, Prashant. Absolutely. Over the last couple of quarters, we've seen SEBI tightening the news on F&O, and there could be potentially further tightening as well. Year to date, all of these counters, BSE is up almost 29%, but on the flip side, when you look at Angel 1, 361 MAM, that is down almost more than 15%, and Motilal Oswal too has taken a knock of almost 2.5%. And valuations, despite this sort of correction that we've seen in most of these counters, are still trading above their 5-year average. Now, when we look at BSE, the 1-year forward PE is around 44 times. This is much higher as compared to the 5-year, average. Only in the case of Angel One is what we see is that the stock is actually trading below the 5-year average. The same goes for Motilal Oswal and 361 MAM. They're above the 5-year average. Now, UBS has written a note on SEBI's plan to raise the tenure for derivatives. They say that if the weekly options expiry are removed, it could highly impact BSE's profitability. In fact, they also did a scenario analysis, and they say that every 10% drop in options premium average daily turnover can impact 6% of BSE's profitability. So largely, that is the valuation picture as well as UBS's take on this story.
Now, of course, Vamakshi, thank you very much. Very helpful. It's we'll have to wait for that consultation paper because, as Siddharth also pointed out, whether it's going to move from weekly to fortnightly or it's going to basically just be a monthly one. So that, I think, will determine a lot of it. And the other thing, of course, is you've got so many exchanges which are coming up, right? You've got, we had the new exchange, right? Metropolitan Stock Exchange. Yeah. They had a weekly option. I mean, the entire business case was that weekly, at least a prima facie. NCDX, by the way, is raised a round of funding from investors. Lots of HNIs have put in money there. So more exchanges. I mean, I don't think the need for that goes away, but this certainly is something which all those investors and all those exchanges will be noting quite closely as well. Siddharth, thank you very much for joining us. It's interesting perspective, and we'll have you back on for more as this story continues to develop. I think, just a quick look at the GIFT Nifty and see what's happening before we bring in Siddharth Khemka, who's with us as well. I think still about 70, 80 odd points lower. Siddharth Khemka is with us, Head of Research, Wealth Management and Motilal Oswal Financial Services. Sid, good morning. Good to have you here. Any specific thoughts on any of these listed companies that Vamakshi was referring to on the back of this news?
I think that debate will continue, and in the near term, definitely there will be a pressure on volumes, especially on the derivative side. So that you have to take it on the chin. But I think on the longer term, what we believe is that the structural framework for the markets, equity markets, that will become more stronger. That will bring in more retail participation, and I think that is structurally positive for exchanges, for wealth management firms. So while there could be a near-term hit in the direct exchanges or the brokerage stocks, I think the wealth management and the AMC stocks that will benefit a lot with a lot of flows coming in. So clearly, I think structurally positive. As we was just you had the discussion earlier. Few years back, we used to have only the monthly derivatives, and that still then we used to see a lot of participation. So I think if something of that sort happens, it could be a long-term structural positive purely from a retail participation perspective. But that will definitely take away a lot of depth from the derivatives market. We have seen huge participation in the weekly index options. I think that is something that the regulators and the exchanges and the brokerage companies, they should have a proper discussion on around it. What should be a fair period for the derivatives contract. In the interim, I think one can focus on the wealth management, the AMC stocks.
By the way, I was speaking of whether asset management companies, mutual fund stocks, whether they'll be beneficiaries of this whole move or not. Interesting anecdote I got from Mr. Sandeep Sikka of Nippon Life AMC, and he was saying that if you go back and he was quoting data of the last 10 years, that every time there has been a lull in the capital market for one reason or the other, except speculation or fall or whatever, and people have burned their fingers after an excessive, especially a mid-cap exuberance patch. He says data backs that we get better flows, we get, more number of folios being opened up. So, yeah, I think the mutual fund industry is really waiting in the wings to see if they can be the beneficiaries of, crackdown on speculation, retail speculation at least, in the market. Hi, morning. Very quickly, let's talk about, some more stocks. Apollo Hospitals, a block deal is expected. The promoters may sell a small bit of equity in the market, 1% odd. It's been such a huge wealth creator, right? Is any dip a buying opportunity, or do you think the stock is already priced to perfection?
Good morning, Surbi. Yes, I think we continue to remain positive on the overall healthcare, especially the hospital space, continues to deliver resilient growth. If you look at in the last 5 years on an aggregate basis as well, the healthcare sector has reported a revenue CAGR of about 16%, EBITDA CAGR of 26%. So margins have improved, operating variables, for example, the occupancy, the average revenue per operating bed, all those metrics have only improved, and we have seen a lot of consolidation in the industry. So I think Apollo Hospital, definitely we have a very positive view. It is among our top picks within the healthcare space. Even Q1 results pretty strong. They are enhancing their integrated healthcare model by expanding hospitals, growing their offline pharmacy network, and as well as optimizing the GMV, reducing the OPEX in the online pharmacy. So all these initiatives are expected to drive a 15% revenue, 28% net profit CAGR over the next 2 years. So we remain positive. We have a buy rating and a target price of 9,000 on Apollo Hospitals.
All right. We'll take a quick commercial break here, and we're going to come back in just a bit from now. Apollo Hospitals trade at the bottom of the screen, of course, details there. We'll be back with Shrikant Chauhan. It's a Friday, and you'll hear from Shrikant with his trade. Sudeep Shah of SBI Securities comes in as well. Stay tuned.
Welcome back. Hope you're having a good morning. Well, Hormuz joins in. He's going to tell us about all the big movers yesterday, which moved up on heavy volumes, and it's going to touch in on the delivery as well. Hormuz, take it away.
Morning, Nigel, and some very interesting delivery data that has come up for a couple of these stocks that were some of the big movers yesterday. Lemon Tree Hotels is one of them, and the stock was up yesterday almost 8-9%. It was the fifth day of gains out of the last 7 sessions, and in this last 7 sessions, the stock has gained almost 17%. Now, in yesterday's trade, we had almost 1.5 crore shares change hands compared to a 20-day average volume, which is close to 30 lakhs, and this was the highest since the 10th of July. Now, almost 60 lakh shares, or almost 40% of those shares that were traded yesterday, were marked for delivery compared to a 20-day average of almost 12 lakh shares. Now, in an instance, this was the third instance in the last 3 months where more than 1 crore shares of Lemon Tree were traded in a single trading session. And every time this has happened, the number of shares that are marked for delivery range anywhere between 35 to 50%. So delivery remains higher when the number of shares traded are also on the higher side. Nava was another mover yesterday. Almost 2 crore shares changed hands in yesterday's trading session, and that was the first time since August of 2022 that such an instance took place. Now, almost 17 lakh shares, or close to 10% of those shares traded yesterday, were marked for delivery compared to a 20-day average of just close to 2.5 lakh shares. And this was only the third instance in the last 12 months that more than 1 crore shares were traded in a single session for Nava. The last one is RACL Gear Tech. We highlighted this in closing bell yesterday as well. And Thursday's volumes were the equivalent of the last 30 trading sessions put together, with almost 6 lakh shares changing hands yesterday. At the 20-day average is just 12,500. So it shows the kind of volumes that were there in yesterday's session. But only 60,000 shares were marked for delivery, which is only around about 10 to 11% of the total traded volume that was marked for delivery, which is still higher compared to the 20-day average of just around 6,500 shares. So a lot of movers, Lemon Tree one of them, and some of the others moving on very high volumes as well.
Got it. Thanks a lot for that, Hormuz. Interesting moves, high delivery, solid volumes as well. Hormuz always slicing and dicing all of those data points. Thanks for that. Moving back to Sid though. Hi Sid, good to see you, and as always, Friday morning. The evening will be more interesting, I'm guessing. But let's talk about stocks for now. Vedanta, not the one for the faint-hearted. Promoters have been questioned numerous times. You don't know what Mr. Agarwal is going to do next. And maybe the questions are rightly so. But if I just track the stock performance in the last 1 year, the stock is flat, the Nifty is flat. But you've got 12% dividend yield, 55 rupees of dividend. What's your view? Another 16 rupees they've announced.
Morning, Nigel. Glad to see you. I think this continues to be the perpetual question: what will Mr. Agarwal do next? And that keeps the market a bit on the sideline. But I think overall, our view on the metals is starting to become more constructive. We see incrementally things on the global front improving, and even from the China front, we are seeing some improvement in economy that should lead to higher and firmer prices. On its part, if you look at Vedanta, some of the metals like zinc, copper, I think aluminum, they are pretty much stable. And we see, so we maintain a positive view. We see Q1 performance for Vedanta coming in largely in line. Management maintains a strong growth outlook led by the increasing capacity, which should produce higher value-added products. Also, they're firm on the deleveraging plan going forward, higher cash flows which support expansion, plus the consistently coming in cash flows. So I think especially for some of the high-risk investors, Vedanta continues to remain attractive, both in terms of valuation and the consistent dividend cash flows that keeps coming in.
Okay, all right. Siddharth, thanks very much. Good to have you on the show today, and have a great Friday. We look forward to connecting again soon. We'll take a break on that note, come back on the other side. We'll have the pre-opening rates come in, and of course, with us, we'll have Vijay Agrawal of Aquarius to talk about the real estate sector outlook. Welcome back. So it's time to get the technical perspective on the market, and the market's had a good run. I mean, it's been a good week, 2% on the index. In fact, even the mid-cap index up about 2%, small-cap index almost 2.5%. So what now after a 700-point rally from the lows? Shrikant Chauhan and Sudeep Shah are with us for a quick perspective. Morning, gentlemen. Good to have you on. Shrikant, so let me ask you, I mean, the pre-open, rather the implied open in the GIFT Nifty, it's been pointing to a bit of a cautious start today. What would your approach be? Let's talk indices first, Nifty and Bank Nifty.
Good morning, Survi. Good morning, everyone. Let's say for Nifty, it is like consolidating. It has been consolidating since the last 2 days above the levels of 25,000. But in case if there is any correction today because of the maybe weakness in the Asian markets, somewhere close to 24,950, 25,000, the market is having excellent support. And by and large, I am of the view that the supports have shifted from 24,500 to 24,800, 850. So that should be the final stop loss for holding any long position. And today, because of any reason, if we are getting this deep in the market, then I think there we should look for taking some contra bets of going long in the market. Broadly, I am of the view that the markets are heading for at least 25,400, 25,500 in next few days. It will take some time, but gradually we are heading higher and value buying is happening. Number of stocks are doing well. Bank Nifty is finding difficulties to sustain at 56,000, but there also downside is limited. 55,000, 55,300 going to act as major support. And there also our view is same. In case if there is any lower opening, we should look for adding long positions. There also we are expecting 57,000 in next few days.
Okay, all right. Sounding quite optimistic, Shrikant. Buy the dips. That's the strategy that Shrikant is adopting. Sudeep as well joins us in the show. Morning, Sudeep. Good to see you on the show. What's the view? Nifty is indicating, GIFT Nifty is indicating 80-point gap down. Would you be looking to buy into the dip?
Absolutely. Good morning, Nigel. Yes, see, I feel post that gap up last week about 24,800 and the follow-up move towards 25,150. Yesterday, we saw some kind of a sideways action, maybe on account of expiry. But today's gap down, I feel gives an opportunity to enter quality stocks at lower prices because a lot of sectors now have started to open up. We've seen IT showing some kinds of positive signs in the last 2 days. Auto has been moving, pharma, metals. So slowly and steadily, a lot of sectors are now opening up. So that is giving us confidence that yes, maybe we might see some consolidation here, but the overall trend now remains constructive. And 24,800, 24,850 positionally now remains an important support for us until this holds. Amidst this gap down opening or some dip early morning, I feel overall the markets are headed towards 25,300, 25,450 in the coming week. Similarly for Bank Nifty also, I agree with Shrikant that 55,000, 55,200 now is a stronger base. Although upside we are seeing some kind of a resistance. But there crossing 55,750 for me, 55,800 will be very important. So once 55,800 is taken out, a straight gush towards 56,500 and 57,000 also cannot be ruled out. And that could be a faster move beyond 55,800.
Okay, all right. Gentlemen, let's get down to stocks as well. The individual ideas for the day. Shrikant, what's your list looking like?
The two stocks are showing real buying interest in the market, and whenever there is a correction in the market, we see these stocks find good amount of buying support and they immediately bounces back whenever there is a minor rally in the market. Apollo Hospital in that looks a really strong case to buy. Today there is news that it may come under some block deal pressure, and in case if there is any lower opening, then close to 7,800 we should look for creating or taking long bets on the stock. With a stop loss close to 7,700. We are specifically bullish on the stock. Fundamentally also, we are expecting stock to move towards 9,000 sort of levels. And today, in case if there is any lower opening, then it will be an opportunity for short-term traders to create long positions. We are expecting 8,000 in the near term to hit. Also, we like Grasim Industries. And since last almost 1 year, the stock was facing multiple resistance close to 2850, 2875. But eventually now the stock is managing to absorb the selling pressure, which is close to 28.50-75 levels. Here also, I'm quite optimistic. I'm expecting stock to move towards 3,000 sort of levels. In the near term, we could see 29.75, 3,000 sort of levels. We can keep a stop loss around 28.30 for creating any long position.
Okay. And Sudeep, what about you? Stocks for the day?
See, a couple of sectors are looking good now. Grasim was a pick, but now I agree with Shrikant about the possible up move. The other two stocks that are there on my radar are one is from the hotel space, one is Chalet Hotels. Now here also, in the last few days, we have seen Indian Hotels, Lemon Tree, Chalet Hotels all showing some kind of a positive move. And specifically, if we talk about Chalet Hotels, then here in the last 8-9 weeks, right from 23rd May, the stock has been consolidating between 850 and 950. And this week, we have seen some kind of a decent breakout at higher levels post this consolidation. So we feel from a positional perspective, the stock can do 1150, 1200 in the coming few months. And this can be bought from a delivery perspective with a 970 stop loss on the downside. The second stock that is there on our radar is Cipla from the pharma space. We feel last few days, pharma healthcare, they are showing some signs of accumulation, some signs of breaking out stock specific in case of the within the sector. And Cipla also has been consolidating between this band of 1400 and 1500, 1530 since November 2024. And yesterday we have seen a decent breakout with volumes backed by open interest buildup also. So the numbers also in the last few quarters have been decent. So we feel that this also from a positional perspective can be added, and 1550 can act as a strong stop loss. On the upside, 1700, 1730 looks likely in the coming few months.
You know, I just want to, thanks very much, gentlemen, for that. I just want to make one quick comment on Cipla. I mean, of course, the trade is a technical trade, but there is some fundamental news flow on Cipla, which actually is slightly negative. So keep an eye out on that. Mylan has received approval for a product called Abraxane. It's a drug which is used to treat cancers, breast cancer and other forms of cancer. You know, it seems like there are already now 6 generic players in the market. So I just wanted to kind of sort of put other fundamental news point as well, and maybe we'll have Ekta join us a little later on that. So that's the bit on Cipla coming through. But thanks, gentlemen, for those trades. Let's now just look at what's happening on the entire the market, right? The pre-open session, the GIFT Nifty. The Nifty will come up on your screen, 25 points lower, so it's not that bad. We'll see. It's just initial rates which are coming through. 3 minutes to go about for the pre-open session to come to a close. 25,060 is where we are at. I think, Surabhi, we have a real estate discussion in focus.
Well, yes, we are putting the spotlight on the realty sector now. A lot of stocks have been buzzing around in trade. And the numbers have been largely good. I mean, if you're looking at pre-sales for most of the companies, Vijay Agarwal, Managing Director and Head of Infrastructure and Real Estate at Aquarius, is with us now. Vijay, great to have you on. So, I mean, it's been good going so far, right? Let me first start with the latest developments. I mean, this GST cut, if it indeed comes through, do you think it can have any marginal additional benefits for real estate players?
Yeah, definitely. See, GST cut will definitely reduce the cost to consumers. And if cost to consumers is reduced, then we had always seen the buying coming from the consumers. Like if you see a real interest rate cut has created a positive momentum from the investors buying. So same GST cut will also give the same impact for the sector.
Okay, all right. Hi, Vijay. Good to see you, Ben. What's the approach then in terms of, everyone's been talking about this 10-year cycle, 15-year cycle, in terms of real estate. Where do you think we are at? And going by the inventory levels with your channel checks, what do you think? How are things evolving?
Well, things are evolving in a better way. I think today the markets are driven by actual user demand. Majority of purchases are by actual user, which is very healthy for any market. See, in past, we had seen a break in the market where the investors came in, they were doing a lot of buying, actual users were not there. Then resale came down, and which impacted the developer sales also. So now we have a healthy demand which is coming from actual users. Secondly, families have money to buy the houses. We are seeing a 600 crores, 2 penthouses deal also in this market. And if you see the data from all the real estate company, mid premium and upper mid premium, these sales are very good. I think we are seeing a little bit slow on the sales which are coming on the lower end of the market. Like if you say a 4,000 rupees, 5,000 rupees, I think those are what we call as a budget segment. The sales velocity is not that great. So what it says that the Indians are preferring a better homes and they are not compromising on their living space. Basically, because you are spending a lot of time in your home. And now people are cautious what quality of home I should have, where I should stay. Earlier, we used to buy a home in a 2-story, 4-story building which doesn't have a lift. But today, if your home is without, the building is without a lift, you will not able to sell. Now people are asking for amenities and everything, and nobody is questioning about price. That's a good thing. So means people are ready to pay a price for the amenities. And I think the developers
Everybody
have
wants
also
top dollar amenities in their house. I get that. The question is really from an investment perspective. Do the stocks have more upside? The listed universe of real estate stocks, would you put in fresh money to work now?
Yeah, I think selectively we can always look for pockets where you can make money. So like I'll say our research, Pulte Patil, we had a research where we said there's a 20% upside on the stock. So there are pockets where you can always make money. See, why you will make money? See, ultimately there has to be a growth in the sales, profitability of these companies and a free cash flows. I think we are seeing that those three things are panning out in most of the real estate stocks. And that's a good sign, healthy sign for the market.
So still more upsides perhaps and more money-making opportunities in real estate stocks. Got it? Thank you very much for joining us with that conversation today. Well, it's 9:10. Let's quickly take stock of where the pre-open session is settled. It's very quiet, 20 points lower on the Nifty. That's about it. Not too many movers and shakers today. Our Systems was a stock in news. I think they announced an order win, 7% up on that stock. Texmaco Rail announced an order as well. I think this order they've got is from Garden Reach Shipbuilders. So it's working well for the stock, 3.5% up. Otherwise, fairly quiet out there. Today, actually, by the way, look at the capital market stocks. I think the worst of the hit happened, most of it at least happened yesterday. BSE is flat. Angel One is up about 0.25%. So it's very, very quiet for the time being.
You know, so we just, and those are also stocks with news, right, which we discussed. But maybe we can just put the hotboards up and look at where stocks are, stuff that we discussed over the last 1 hour or so. So Wipro is about 1% higher. That's the acquisition boost, a news that we put out. Apollo Hospitals, of course, block. We heard Apollo is a pick from our fundamental analyst right in the morning. Vedanta, dividend, right? And let's just look at what the stock is doing there. About 1% higher, 451. And of course, a bunch of other news flow related names. There's Our Systems, Piramal Pharma, Titagarh Rail, which are up on your screen as well. Our Systems is up 7%. That's actually the one big meaningful mover which is coming through. Look at Texmaco and SJVN as well. And they're up on your screen, 3.5 on Texmaco at this point. Hikal is another one. Which we should look at, 2.25% down. There's a US FDA warning letter, and PTC Industries has got an order, so that is the other one which has come through. It's up about 1%. Cipla, maybe I just want to take a quick look at what that is opening. I was talking about Mylan, which has got approval for an important drug, which Cipla also is in the market with. It's nothing. It's actually absolutely flat. 1590, about a 2-3 rupee cut at this point in time.
On Our Systems, I just thought I'll jog our viewers' memory. The acquisition that they have done, that seems to be getting a thumbs up from the market. They have acquired a company for 400 crores, which is, not two times sales, but yeah, I mean, definitely more than one time sales. 264 crores is the revenue of the company. They're acquiring it for about 400 crores. Market seems to be finding some sense in it. Let's quickly move on. Vinny is joining in. CLSA has come out with a very interesting report card on earnings. Vinny, tell us more.
Absolutely, an interesting report card coming in. There are a lot of upgrades and downgrades. Let's talk about that, right? Now, looking at the earnings coming in this time, for FY26, they have given an earnings upgrade for some of the companies. Firstly, let's start with that. Upgrade coming in from Fusion Micro for around 4 times. That's 384% in terms of earnings and EPS upgrade that we're talking about. HPCL, they've upgraded the EPS by around 97% for FY26. So good numbers coming in here. BPCL also, they're expecting an up move there, an upgrade coming in for the EPS for BPCL as well by 88%. Now, on the flip side, they have come out with downgrades after the earnings for Devyani International. 58%, I beg your pardon, is the decline they're expecting there in terms of earnings. Bandhan Bank 35%, IndusInd Bank 34% as well. For FY27, there are some different names that have come in terms of earnings estimate upgrade that they've given. Dalmia Bharat, Keynes Technology as well as Amber Enterprises. So seems like that EMS play is what they're bullish on. While in terms of downgrades, again coming in from the banking side. So IndusInd Bank, Bandhan Bank as well as restaurant brand Asia. So QSR is something that they are not too bullish on. Now, overall rating upgrades have also come in from CLSA after the earnings for Phoenix Mills, Eicher Motors, Ashok Leyland. They've upgraded it from hold to an outperform, while underperform to a hold. So earnings upgrade there coming in for HPCL as well as Fusion Finance as well. And rating downgrades coming in for Nestle that we're looking out for, as well as Paytm and Bharti Hexacom as well. We're seeing rating downgrades also coming in.
All right, Vinny, thanks very much for that. So those are earnings changes after the earnings season. Just 2 other names. I don't know if you can pull up the graphics. Mazgaon Dock, JP Morgan is underweight. There's a call this morning which has come through, and they say that risk-reward remains adverse despite the stock price correction. And the other one is Divi's Laboratories. Here they've got a buy. Citi's got a call. They've got a buy. 77.50 is the target. They say recent weakness is a buying opportunity. So just wanted to put those 2 names as well. One, of course, on the downside, Mazgaon from JP, and the other one is Divi's with a buy on from Citi. Well, first rates coming through in just a bit from now. 20 points lower on the Nifty, 50 points lower on the sensex. And there we go. First rates coming through. 25,070 on the Nifty. So this is actually pretty flat, right? Nothing at all. Nifty Bank is down about 0.25% or so. The small cap index, nothing. Unchanged almost. Mid cap index also coming through. With really flat and unchanged kind of rates. Let's look at the Nifty heat map before we go any further. Take a quick look and then we will sort of get down to it in terms of individual movers. What do we have as far as the first kind of picture is concerned? How many up and down? 840 up on the NSE and about 650 down, but that's very, very initial early rates. It is, 30 or 32 names lower and the rest which are higher at this point. So Wipro right on the top of the list. There's good news there. And the other end is Apollo Hospitals. But I don't think there's anything large, right, in terms of single stocks in the Nifty 50, which are making a move. Surbhi.
No, there isn't. It's very quiet start. Apollo Hospitals is down about 0.5% as we're looking out for that block trade where the promoters sell a little over 1% equity. That's the anticipation. Let's look at, it's still down about. It's the biggest loser on the Nifty right now. ICICI Bank, SBI Life, HDFC Life, some of the financials are undoing their yesterday's up move, especially the life insurance companies. There's also Reliance, which is a little sluggish this morning. TCS is down about 0.3%. HDFC Bank is down 0.25%. So this is pretty much where the drag is coming in. ICICI Bank is now down almost 1%. So financials are weak. Apollo Hospitals is about 0.5% lower. On the flip side, Wipro, with that acquisition, that's definitely catching the market's attention. 1% higher on Wipro. Apart from that, there's Tata Motors, a little bit of gain. BEL, 0.5% higher. Mahindra & Mahindra, 0.5%. That's it. It's a very quiet Friday morning. Nigel.
Well, that's right. But a few stocks in the broader markets are moving around. Lemon Tree, I recall the stock yesterday had a good trading session. In fact, for this week, Lemon Tree is up close to around 18%. That's one of the big movers. It's up close to around 3.5%. I think we had a guest, not able to recall the name, who had said that Lemon Tree could be an outperformer actually. And that one, in fact, this week itself. Deepan Mehta, Deepan had spoken about this name. And that one clearly is firing all cylinders. Tex Macro Rail, that's the other one that's up close to around 4%. So big move is what we're seeing out there. In top volume movers, DCX Systems. That stock is bursting away. It's up close to around 8.5%. Massive volumes on that name as well. Vodafone Idea is holding up with a gain of close to around 2%. So we should get that one as well up for you on the screen. And, Indus Stars, it's been a rank underperformer. But if you're going to have three players that will, will survive, then it could be more business for Indus Stars. And that's why that stock, in fact, is up and about in today's trading session as well, up 1.5%. Otherwise, Coffee Day, I think the stock this week is up more than 20%. It's now coming for some profit taking on the downside. Swiggy, not swinging it away today. That one as well is down close to around 2.5% after seeing a good rally in the last week or so. IDBI Bank as well, some profit taking. And BSE, the problem is that there could be an earnings hit. The magnitude we'll have to see, if you're going to have reduced expiries. So that's why that's down another 1.5%. And MCX, well, that's an optional value out there. So no direct earnings hit as such. The problem will be on the valuation front. But clearly the stock that's catching your attention is DCX, up 12.5% on that name.
Absolutely. And, stuff coming through right now on some of these names. 50 points lower on the Nifty, 25,030 is where the Nifty is at this stage. Just a few other names, right? Lemon Tree's there, up there. Divi's, of course, I just mentioned right before market opening, that call from Citi, 2% higher on Divi's. There's a company called ISMO. It's they've essentially they've got a semiconductor, I think, packaging business. I think it's an OSAT business. But look at the volumes. It's the fourth largest volume-led gainer on the NSE, out of the blue. And they've developed a new way of packaging these chips. So we'll have to see exactly. We'll have to get into it, but it caught my eye. So just making a mention of it. We'll have more on this one, maybe with Hormuz a little later. Indus Tower is coming up. Is not seen that amongst the top volume-led gainers list, 1.5% on Indus Tower right now. PG Electroplast has been constantly, down a lot earlier and then up a fair bit this week from the lows. 480 or so was the low, and it's picked up about 100 rupees from there over the last 5-6 days. SML Isuzu was the other one, big mover yesterday, and what a week it's actually. More than a week, what a month it's had, right? 40% on SML so far in the month of August. Sagility, I think Kotak has initiated coverage on Sagility. So we'll maybe ask Sanjeev on that. All-Time Plastics is another name, 3.5%. There was a deal earlier from one of the prominent investors. So that's seeing some gains coming through. Nazara is another one on the downside. Nazara is down 3.5%. It was down sharply yesterday. Actually, it started slow in terms of a correction. We had the management with us. But by the end of it, it was down almost 10% and is down a little bit more, 3.5% lower right now. So on the downside, apart from that, with volumes, there's very little to talk about. Things will pick up. Nifty is down a full 80-odd points now, 25,000. Sanjeev Prasad is our market master of the day. He's with us, Managing Director and Co-Head at Kotak Institutional Equities. Sanjeev, good to have you with us here. Thanks for your time. Some are making the case that maybe consumption has been in the doldrums, and these GST-related reform simplifications, if it is done in a meaningful way, can turn the tide. And within people, and if you look at the basket of people with that view, some say it could be a tactical move, some say it could be a really, durable one. First of all, do you believe it is possible? And how do you think about it? And where will this show up in a big way if this were to be a meaningful reform?
If you look at what the government has been trying to do in the last 6-7 months, clearly the effort seems to be on reviving consumption demand. I think the government realizes that investment demand has been on the weakest side. And starting with the income tax cut, which was announced in the budget, you had then the RBI cutting policy rates by 100 basis points. And now you have a more action in the form of GST rate rationalization. So hopefully all these things result, some pickup in consumption demand. The bottom of the pyramid consumption has been really struggling given income challenges over there, and the fact that affordability has been a big issue. Prices have gone up a lot across the board. The whole idea is, to make things more affordable, and hopefully, companies pass on the full benefits of GST cuts to the consumer, which results in prices becoming or items becoming more affordable, and hopefully demand picking up. So that's what the government is betting on. The market has a slightly different take on this. The market seems to be assuming that most of the cuts in the GST rates, whether it is 28% items moving to 18% or 12% items moving to 5%. Most of them will retained by the companies, which will result in a big increase in the profitability and profits, which of course means that you may not have that much of volume impact. So let's see, how this exactly plays out with a combination of profitability versus volumes. The common intent is very clear. It wants, the cuts to be passed on and result in high profitability and volume growth. Market seems to be taking a differently on that. So let's see.
That would be a bit of maybe a self-goal, won't it, Sanjeev? Hi, morning. Great to have you on because we've seen that in the past as well, right? The benefits of lower commodity costs over the last, and I'm not talking Q1, but in general, we've had patches of reasonably decent, margin sustenance. The problem for the market, however, is growth. And on that, where do you think we stand at the end of Q1? Do you feel we'll at least get into double-digit earnings and maybe better-looking top lines by the time we get into full-blown festive season?
The growth challenges remain. It's been sluggish, and that is why the government is trying various things to revive consumption. Do keep in mind the fact that some of the drivers of GDP growth in the last 4 or 5 years, which was largely high-income household consumption and government spending and household spending, that is residential real estate, all these three items look like they could see some slowdown. I mean, government capex, we anyway know, look at the government budget numbers for FY26, that's the central government number, that's only a 7% growth. So clearly that's a big slowdown compared to the growth rates which you have seen in the last 3-4 years, particularly FY2020 to FY2024, when you had massive growth in railways and road spending, etc. Given the challenges of weakish sentiment in the IT sector and also which seems to be spreading to the GCCs, and given the fact that residential real estate prices have moved up a lot in the last 18-24 months, I would expect household investment, that is purchases of residential real estate, that should also slow down. Hope is, somewhere you see some revival in consumption, which balances out the slowdown in investment. Exports is anyway, a big challenge as of now, given what was happening on the geopolitical front, as also on the whole trade tariff issue. So with that background, I don't know. It doesn't look like you will see a big acceleration in the economy. The hope is somewhere in the festival season things start picking up, but let's see.
So numerically, Sanjeev, so I didn't quite get the range. So numerically, now that Q1 is over, where are you with respect to full year earnings estimates?
So we are about 9% now, and have to be precise. But the quality of earnings growth in FY 2026 is not great. I'm talking about the Nifty 50 index. More than 60% of the incremental profits are actually coming from 3 sectors, and which really don't have much to do with the economy also, to be honest with you. So if you look at about 20% is coming from the metal mining sector. That is largely on the back of improved profitability for the steel sector, on the back of safeguard duties. Then you have the telecom sector, including Reliance, which is going to contribute to incremental profits based on the expected increase in tariffs somewhere in December, January timeframe, and the fact that you're seeing the full benefits of the tariff increase last year, that's playing out now. And lastly, you have ONGC also, which is contributing about 20% of the incremental profits. That's more to do with the gas price formula. So the nature of the incremental earning growth is not a very good quality. It's not as if we are seeing some big recovery in the economy, which is resulting in this 10% earning growth. Hopefully that will play out in 2027, but that remains to be seen. As of now, the growth trajectory for the broader economy itself is looking a bit challenged, I would say.
As you said, 9% Nifty earnings growth for FY26, right? That's your estimate.
Yeah.
Okay, got that.
Hi, Sanjeev. Good morning. Good to see you, Ben. Sanjeev, what according to you is the message that the government is sending out? In the budget as well, the focus is on putting money into the hands of taxpayers, more money. Even now with the GST cuts as well, they're indicating they're focusing more on the consumption story. While the capex expenditure, that seems to have taken a bit of been put on the back burner. No big increase this year. You have big elections as well coming up. What is your view on this? This is the government that actually was, ramping up on the capex side. Now that seems to be turning a little bit. Your take?
Yeah, I think the government realizes that it can do only that much with respect to investment. Particularly if you look at the central government, I mean, there are three areas where the central government can spend dramatically. One is defense, second is railway and roads. The challenge over there is if you look at railways in particular, your expenditure used to be about 680 billion rupees or so in FY 2020. That has already gone up to about 2.5 to 2.6 trillion rupees by the time we hit FY 2025. A lot of low-hanging fruit on the railway cap is already done in my view. And what I mean by that is electrification, which used to be, sub 50% about 10 years back, that has now crossed 90%. You have put in a lot of safety signaling systems and so on and so forth. On the back of that, your average railway freight and passenger rate movement, that has gone up. On the back of that, India has already ordered a lot of rolling stock, coaches, etc. So I think as you're hitting some sort of a peak with respect to the capacity utilization of the current railway network, which means you will not probably see a big increase in capex on railways. If you look at roads, where you are seeing a similar growth, similar 680 billion rupees in FY 2020 went up to about 2.4, 2.5 trillion rupees by the time we hit FY 2024. I mean, India has already a very decent, highway network, right? Intercity network is actually quite good. So you will see a natural slowdown over there. And I think the government understands that it can only do that much. Where India needs to put in more money on the capex side is the intra-city infrastructure, a combination of, urban housing, mobility, and water. Of course, the states are constrained, given the fiscal challenges, etc. And institutional capacity is also a bit weak over there. So I don't know, it looks doubtful that government capex is going to accelerate. Just to give you some data, if you look at public sector plus government spending as a percent GDP, that used to be about 6.9% of budget in of GDP in FY 2020. That went to about 7.9% by the time we reached FY 2024, which means it was going much faster than normal GDP growth. But that's about it. I think we are flattening out over there, which means the government has to try something new, which is basically the extra focus on consumption for now. In the meantime, we are still waiting for private capex to pick up. That's been sluggish. It's been in the range of 11% of GDP for the last several years now, and no signs of acceleration over there. So I guess the government is trying whatever it can. It knows that its own spending on capex is going to be limited going forward. Private capex not yet picking up. So let's try whatever we can do on the consumption side.
Got that. You got a call on Sagility, Sanjeev, this morning, I believe, right? Do you want to just take us through that? Just the thesis?
No, it's initiation of 3 companies in the BPO space, actually. So it's got nothing to do specifically with Sagility. Yeah. So we have 3 company initiations: Sagility with the buy, Source with the reduce, and Eclipse with reduce. Yeah.
Yeah, but out of the 3, there's only Sagility which is a buy. Hence, I was asking about that. Yeah, target of about 56 or so. You mentioned a few names, Sanjeev, but out of the coverage universe, as you look ahead, right? When clients ask you for ideas, what do you tell them in terms of single stocks? Really top of the list, absolute return candidates from here.
A few banks. Tier 1 private banks, couple of Tier 2 private banks, some of the domestic pharmaceutical companies and healthcare services companies, which are hospitals and diagnostics. A couple of names in capital goods, but that's about it. That's been our model portfolio anyway for the last 12 months or so. Yeah, nothing has changed over there. Continue to be pretty negative on consumption from IT services, given the combination of very stiff valuations and not much of work for now. So nothing has changed really in terms of our view when it comes to the market or to stocks.
So on consumption, just to wrap it up, Sanjeev, why is it that you're not at all optimistic of any sort of a revival on any element of consumption? I mean, whether it is premium, mid, lower end, because of what you started off by saying, that companies will probably pocket the benefits of this GST cut. Is that why?
Well, I'm not saying I'm not positive on consumption. I'm cautious on consumption. The hope is it will recover gradually from where we are, but it's not going to be a massive recovery. Keep in mind the fact that India is simply not getting enough number of good quality jobs, and we have written enough on that. You look at the government's own PLFL's data, most of the incremental workforce is ending up in agriculture or in the gig economy, where of course income is not going to be very high. So that fundamental structural problem still remains, and for that we need private sector investment to really pick up for jobs to be created on the back of that incomes to grow and consumption to really take off. I mean, we are nowhere near that cycle to start. The bigger problem with consumption is not so much whether it will recover or not recover, it's just the valuations. Even assuming if you see a big recovery, there's no way I can justify 45 to 55 P, which is where most of the consumer stable companies are trading at, with the kind of growth rates they're reporting, or even with some acceleration in growth rates. Even if they go to, let's say, mid-single digit, high single digit, I mean, there's no way you can justify 45, 50.
I think, Sanjeev, the market is hearing you very closely. And the market's now giving up some of its excitement of earlier in the week, because as we are speaking, the morning is looking a bit red, 128 points lower on the Nifty. But yeah, we take your concern on board. And I think we have to see how the next couple of weeks and months play out, and if indeed that consumption boost comes through or not. Thank you so much for joining us this morning. Thanks very much. Great conversation. Let's just pull up the Nifty now, 24,950, so 25,000 for the time being. Bulls are finding it hard to hold on to it. Maybe just want to kind of keep some of those gains back in the pocket, considering it's been a good week so far. Right now, it's a downward slope. Mid-cap index is relatively better off. Bank Nifty is also down about 0.6% at this point in time. So a bit of a slippery slide. Let's focus on a couple of individual stocks then. We've got Sud joining in. He's, I think, looking at Divi's and Mazgaon Dock. So tell us more. Oh, we've got Vinny in as well. The more the merrier. Go on, Sud, let's start with you.
So first on Divi's Lab, Citi has a buy call and target that it has given is of 7,750 per share. It believes the recent weakness in the stock is a buying opportunity, because also valuations are reasonable due to sector tailwinds and the pipeline that company has. Also, it says that concerns around orforglipron, that is weight loss drug, appear overdone, and by FY30 total sales are likely to be more than $15 billion plus. That's the even estimated sales are there. And strong adoption in tirzepatide. Tirzepatide is basically obesity or diabetes drug, and upgrades in product indicate an increase in peptide GLP-1 TAM. Also, concerns around Entresto going generic in the US may start fading away. That is Citi believes. Second is Mazagaon Dock. That is JP Morgan has written a note, underweight call, target is 2468. So from current levels, JP Morgan believes that there is a possibility of 10% downside in the stock. It says risk reward remains adverse despite stock price correction, because Q4 FY25 and Q1 FY26 results are weak due to provisioning related to cost overruns. Also, large order award for P-75 Scorpion submarines have been delayed, and it believes that it might be delayed further, and that will have an impact in the earnings going forward, and that's the reason it has an underweight call.
Okay. Absolutely. Sud, thank you very much for that. So those are the two calls, Mazgaon and Divi's, which are in focus. Well, our systems is what we want to talk about next, and stocks flying away. Vinny's got details here. Vinny.
Hi, so the stock is buzzing in trade today because they've acquired one of these companies that is called Novigo Solutions. This is for 400 crores is a cash consideration. Plus, there will be stocks that are linked to achieving some EBITDA performance. So on the back of that, there'll be additional amount that comes in as well. Now, obviously, let's talk about this acquisition. Why is it important? Because with this, our systems will be expanding its offerings, especially coming in the Middle East region, which has been growing very fast, and plus gaining the delivery presence in Bangalore and tier 2 cities in India as well. This acquisition is expected to be EPS accretive from the first year itself. Novigo financials, when you look at it, revenue is at around 264 crores in FY25. EBITDA is at 25%. And obviously, they've been seeing a strong growth in the last couple of years as well, 44% CAGR growth over the last 3 years. Do not forget, our systems in Q1 or June quarter, when you look at it, that time their EBITDA margins were at 17.3%. So this acquisition, in terms of margins, is accretive, and like they've said as well, from the first year itself they'll be doing well. And for our systems, in terms of their past story and history of acquisitions as well, in the last couple of years they've managed to do well in terms of big acquisitions and turn around these acquisitions and gain because of these acquisitions as well. So that is why a positive coming in here for our systems.
Acquisitions and acquisitions. I was just thinking of yesterday, we were talking about Aurobindo, markets' concerns about them acquiring a huge, giant-sized company. Of course, there's not a straight comparison at all. But in this case, an acquisition has worked very well for our systems. Thank you so much for that, Vinny. Good to get that perspective. Stock's doing very well on an otherwise dull morning. Okay, it's time to get to our first corporate conversation on the show. And the company we're looking at is Hudco. Now, Hudco reported pretty strong loan growth in the first quarter. The company's urban infra segment did fairly well. There was some pressure on margins, however. So we're going to be discussing all of this and more with Mr. Sanjay Kulshrestha, Chairman and Managing Director of Hudco. Sir, great to have you back with us. You know, we're going to be focusing on 3 points, and I just want to lay them out for our viewers. Let's quickly get to it. First of all, we have to understand if Mr. Kulshrestha wants to increase his guidance, because in terms of AUM growth, the company has been doing phenomenally well. Then we'll talk about the margin pressure and what happens, whether it gets better from here on. And finally, we'll talk about the ROA expectations from Hudco that shareholders can perhaps have. Mr. Kulshrestha, great to have you on. So let's start with the good first. And that is the way your AUM is growing, right? I remember when we spoke earlier, a couple of weeks back, you had said that you will be crossing, I think, 1.35 lakh crores. Yeah, that's what you said, that you will be probably doing that in the third quarter. But since you've started the year on such a strong note, aren't you planning to revise that guidance? By the end of FY26, where will your loan book be?
Definitely, I think you are right. We need to redefine our targets, and we are working on that. Hudco is a very sector-agnostic company wherein we can fund starting from the basic infrastructure of water, drains, or energy or waste management. And on the onward side, if you see, we can fund port, airport, new towns, and there are lot of infrastructure which is planned by the state governments. So this is definitely giving a good tailwind to the Hudco, and this is the result of that thing only. So we will be revisiting our guidance because I know that with this kind of pace and with this kind of opportunity, it is required that we should revive our 1.5 lakh crores by 26 guidance. And I think we will be completing this target in Q3 only.
So, sir, by when will you have a new guidance? And even if you can't share an exact number with us, ballpark, will you have 15% loan book growth this year? Could it be better than that? And by when will you have a new number? 1.5 going to whatever it is, 1.7, 1.8 lakh crores?
We are planning to come out with the number in Q3 because things will be more clearer by then, because finally these sanctions has to be converted into disbursement. You may have seen that our sanction has grown from FY23 25,000 to last year it was around 1.27 lakh crores. So these sanctions, since these are very capital intensive projects and with a construction period of 3 to 4 years time, so we are still taking the inputs from the sites and the fields. And definitely we will be reviving this number in Q3.
Okay. All right, Mr. Kulshrestha, so that's on the top line front, and that's not a concern at all. Now let's talk about margins, because margins, your guidance has been that margins will be well over 3% this year, but there was pressure in the first quarter. Is that a short-term sort of phenomena? Just tell us how your cost of funds is moving, and what you can expect on the yield side as well. Which are some of the more margin-accretive projects that you're planning to lend to this year?
I think you are right. It was a temporary phenomena of quarter one. Most of our disbursement has gone on a last part of the quarter one. That's why this ROA or the margins are looking at a squeeze. But definitely this will be a lot of improvement will come in quarter two and quarter three, and we will be stabilizing by quarter two. All these assets which we had funded, all this disbursement will be converted into the bottom line. So definitely these numbers will increase and improve. So I have no doubt about that. Yeah.
Okay. All right. Hi, Mr. Kulshrestha. Good to see you. So good morning. Couple of quick questions then. There's a DAM Capital note. They've initiated coverage on the stock. They have a buy rating, target price of 280. They are citing valuations. They're saying you're trading at 10 times, some of your peers are at mid-teens. That said, I just want to clear out a couple of points because they're positive biases because of a couple of aspects. They're talking about 50,000 crores of disbursements in this year, which will ensure 30% loan growth in FY26. Possible, right?
Possible. Yes, definitely.
Okay, all right. And for the next few years, 25% AUM growth is doable?
It's doable because if you see the opportunities and the wide aspects of the company which is funding, and if you see a lot of states has came out with their own investment policy by 2030. The CRISIL intelligence report has revised the targets, and now which was around 59 lakh crores, 59 lakh crores in during FY19 to 24. Now they had revised to 1.6. So definitely there are a lot of opportunities and there will be upside. So 25% of the growth is catchable to support the sectors.
Okay. You're saying 25% growth of the loan book is possible, and that's a big number. I think shareholders will like that clarity. Just to go back to the margin point, sir, while you said margins will improve, do you retain that guidance? I think you're talking about almost 3.2 to even maybe 3.3% by the time this year ends. Are you still?
Yeah, we are definitely on that number. It will be between 3.2 to 3.3. So we are working on that. And if you see, during quarter 1, we had raised around 20,000 crores and our average cost was only 6.32. And with this S&P upgrading our markets, our sovereign rating, I am definitely sure that it will transfer into the external commercial borrowing rate reductions. And we are expecting some good news from the RBI. And with the CRR change also, we are expecting that the markets will reduce some rates from the banker side because of the higher liquidity. So definitely we are working on these kind of margins only. So I have no doubt that we will retain these kind of guidance like NIM around 3.2 and the spread of between 2 to 2.2.
Okay, all right. Sir, I wanted to ask you about your return ratios. The ROA is around 2%. You have been guiding that it goes back up to around 2.2%. So tell us what are the levels you have in store. And just referring to the note that I was looking at, they are working with ROEs of around 15 to around 17%. That as well as doable?
Yeah, it's doable. If you see ROA, we will be from last 2 years, we are maintaining around more than 2.2%. So now we will be consolidating at around 2.2%. And I think this quarter 1 will be the exception, and because of the disbursement and the last minute disbursement. And if you see, our loan book is continuously increasing, and this loan book is actually the increase in the loan book is reducing our ROA. But we are prioritizing increase in the loan book over ROA because finally we will get the ROA in quarters to come. But the increase in the loan book is our primary and the priority kind of thing.
By the way, we've got confirmation on that Apollo trade. This is the promoter group that has sold down a small part of their equity. It's about 1.3% stake sale that's happened, and now the promoter shareholding in Apollo Hospitals is 28%. And the sale proceeds are going to be utilized to pare down the debt of the promoter group, which also means that there's going to be a significant reduction in pledges on promoter shares. So that's the explanation, and you're seeing that play out on the stock. And as was, perhaps you can say, it was kind of expected as well. The dip has gotten bought into, and the promoters have already given the clarification as well as to why they have chosen to sell this small bit of equity. Apollo Hospitals in news today. Mr. Kulsheshwar, before we let you go and before we wind up the conversation today, sir, a slightly more medium-term picture. And we know that the pivot is happening. HUDCO is now a large urban financier. And you've stated in the past that you want almost 75% of your loan book to be coming in from the urban infra space. By when will this pivot be complete? What's the breakup of your loan book right now? And say 2 years down the line, what would the mix be? And as you keep moving towards urban infra, what happens to the margin profile? Should we expect it to improve? I mean, I'm not just talking about this year's 3.3%. But as your strategic shift is completed, how will the margins look?
Post accreditation by the RBI to become a IFC, we had changed a lot of things. We had changed the paradigm that HUDCO is no more a housing finance company, and now we are working towards the entire gamut of the infrastructure. So in housing, earlier you may be knowing that we were only doing the PMAY counterpart funding to the state government, which is required, and which was going at a very lower rates with very competitive rates to support that sector of the affordable housing to the states. So now, since we are diversifying towards the infrastructure, definitely our margins will improve from the infrastructure returns. So that is point number 1. regarding the housing portfolio, if you see, the PMI Y 2.0 has already been launched, and around the 7 to 8 lakh households are approved by the ministry, our ministry, and another demand of 50 lakh houses is already with them. So in case states comes to us with any counterpart funding, which we are looking at maybe in Q3 to Q4, such kind of demands will increase. Then only it will be sanctioned. But in years to come, I think definitely most of our share will go towards the infrastructure. Presently, we are at around 68%, and by FY 26 completion, we are planning that we should achieve this 75% of the mark.
Okay, so 75% of the book is going to be on the infrastructure side. The residual would be on housing. Got that point. Thank you very much, sir. Good conversation. Thanks for joining in today. Well, we do have to take a very quick break. Come back on the other side, and we will have the management of Healthcare Global joining in to talk about the outlook for the current year, as well as to understand why private hospitals are opposing General Insurance Council's common impanelment, citing pricing and claim issues.
Welcome back. Some signs of bottom fishing actually on the Nifty. We're pulled back a little bit from the day's low. So the 24,900 mark is the important mark. For the time being, some kind of pullback. The good news, though, is that the number of stocks advancing have moved up and the mid-cap index has moved into the green. Let's revisit a couple of stocks that are moving around. Wipro is the one that did some inorganic growth. Rima joins us to run us through the fine print. Rima?
Thanks so much for that. So Wipro has gone ahead and announced the acquisition of DTS, Digital Transformation Solutions, which is a business unit of Harman, which is a Samsung entity. They're paying $375 million. Well, why is the stock down? Because otherwise it's very complementary. It expands their focus in ER&D. It shows aggression. This is the first acquisition done under the new CEO, Srinivas Pallia. Well, a couple of reasons. One, the entire IT pack is weak in trade after the rally that we had earlier this week. Secondly, the acquired company has had flat revenues over the last 3 years. In calendar year 22 and calendar year 2024, the revenues of the acquired company was flat at $315 million. Secondly, because of the larger on-site presence and the business nature, the acquired company has lower margins. In fact, a Nomura note says that this acquisition could impact Wipro's EBITDA margins by 50 basis points once it's fully integrated, which is in FY 27. And HSBC also points out that the valuation gap of Wipro versus peers is now at a historic low. So these could be some of the reasons why you are seeing the stock subdued.
All right. Rima, thank you very much for that. Okay, I think...
All right. Okay, let's...
Okay, I think I have the mic back. Let me just put this on. Thanks, Nigel. Well, I think we have the management of Healthcare Global, which is in focus. And we have Mr. B.S. Ajay Kumar, Executive Chairman at Healthcare Global Enterprises, joining us now. Mr. Ajay Kumar, good morning. Great to have you with us here on the program, sir. It's always good to see you. I want to, for our viewers, put out three things that we want to sort of obviously discuss, apart from other things. One, of course, is this entire issue of private hospitals opposing General Insurance Council's common impanelment, citing pricing claim issues. Second, outlook for FY 26, of course, and beyond that. And of course, number three is the company's strategy, on growing the oncology care, especially now with KKR as a partner with you. buying out CVC. So we'll talk about all this. Mr. Ajay Kumar, as I said, great to have you with us here. Stock's done very well, sir. You know, when this KKR transaction happened from 500, gone up 30-35%. And of course, I mean, that's a smaller move. The bigger move has happened, and it's basically doubled from 2000 and, over the last 2.5-3 years or so. And many investors believe there is more to go. You are perhaps the only large pure play oncology care health provider, hospital company. So give us a sense, Mr. Ajay Kumar, of what are the since February, since this transaction took place, and you got a new partner. What are they driving at? Give us a sense of what's happening. What is the guidance you want to put out? One common thing I hear from many is that margins will continue to improve, and you're still below where other players are, and that gap will close. So just give us some quantitative idea about how the thinking is evolving, sir.
I think first of all, we are very happy to have KKR, who has significant experience in healthcare, and coming from a perspective of that. And also our operational excellence is really improving significantly now. And with that happening, we are looking at, as you said, improvement in the margin. And as you said, the outlook is very good because our growth is about close to 15%. We'll sustain that. And also, what we are looking at is niche areas where we think we can create the hub and spoke model. With this, infusion centers, which we have spoken before, all of this will give us an upside as we move forward, being a single specialty. And one of the things I want to add is, when people want the first time right care in oncology, they are moving towards a single specialty because we have published outcomes which show very good, equal to global standards. And this is what we look at when we look at a cancer patient. What is the first time right treatment and what will be the outlook for the patient going through the treatment? And globally, cancer actually has shown a great improvement. And what I'm very proud to say today is we are on par with the global best centers. Like I studied in MD Anderson, we are on par with that in terms of outcome when you look at breast cancer, GI cancers, head and neck cancers, where we are very focused in research and academics. And this is what is giving us that destination. So we are truly become a destination for oncology in India and this part of the world, including Africa. And that is what is driving us.
Yeah. No, and that's the other thing I hear from investors, their acknowledgement that, there's a fair bit of R&D work, etc., with cancers that HCG and you've sort of been able to do, and you're passionate about that. Just give us that margin trajectory, sir. I was reading another note which said that about 40% of the beds are still in ramp-up phase. Could you leave us with some numbers? Where do you see margins? When will these beds become margin accretive? Overall, at a HCG level, what is the margin trajectory going to look like? What kind of improvement should we expect every year?
Like I have always said, our first target in margin is to achieve 20% and above. And I think we are on the way to achieving that, hopefully in the last quarter of this year. And we have taken really a lot of steps, particularly with a new CEO coming, Dr. Manish Mathur. I think we are all well aligned to see this improvement happens overall, particularly our centers, which were initially lagging behind, are showing a significant improvement now. And this will sustain. With this, I think our margin will reach about 20%.
And it will, you'll stay there after 20 last quarter this year, and then 20 is, you will maintain at least 20.
Yeah, that is our goal, and our internal strategy shows that we will achieve 20%.
Okay, and it will, beyond that, I mean, any thoughts?
Yeah. But if you look at our Center of Excellence, Bangalore, the margin is over 28 to 30%. Similarly, in a Center of Excellence in Ahmedabad, these are the things which we are out to achieve. Can we achieve the same goal in other centers? For example, Cuttack has a good margin. So our goal is to see whether all of the centers can scale up to this center in Bangalore. And this is where we are headed, and we are in the right path to achieve that.
Okay, all right. Hi, Dr. Ajay Kumar. Good to see you in, sir. Commentary with regard to cancer as well, and the fight against cancer. More power to you, your entire team as well. Gives a lot of hope out there. But that said, KKR announced the acquisition of HCG in February 2025. Now, CVC, they still hold close to a 9% stake. Have they communicated what they want to do with that 9%? Is there a timeline by when they, sell that? Point number one. Point number two, you have taken some money off the table. There was a small, large trade that we saw earlier this week where you sold some stake and a renowned mutual fund bought that stake. As of last count, you had 10.8% stake in the company. Will you look to further bring it down?
No, I have no idea. I do not think so. The only reason I did that is because, where I am in the schema of things, I want to use some of the funds for my philanthropic activities, which have been a long dream for me. So I am using that for women development, leadership training, rural areas, healthcare, education, and policy in terms of disparity. So this is where I have started a policy institute. I'm going to use most of the funds to develop those institutes. As far as the CVC is concerned, I think agreement is that they will come down to 6.6 with 3% more going into KKR. That is the agreement after the open offer. We were waiting for the final numbers. Once that happens, we'll get more clarity on that. So this is where we stand. CVC will be around 6.5-7%. I will be around 9.88, and of course, KKR will be around 54%. The rest will be the publicly held at this point, and I have no intention of doing any further dilution at this point.
Got it. Okay, all right. If you could tell us, there was, you've done some inorganic growth as well. Small hospital, I think, is what you had picked up. Tell us the number of beds you have. How do you see this scale up? And is there more inorganic growth you're looking at?
Yeah, we have acquired the MG hospital in Vijayawada. That has been our inorganic growth. Right now, we are in the consolidation phase. So I really do not want to comment. And once, we get the consolidation, then I'm sure our management team with Dr. Manish Mathur will go and give more clarity on that in the future.
Okay. All right. Thanks a lot, sir, for joining in and giving us all of those details. Well, wishing you all the best, and we look forward to chatting up with you soon. Well, let's get in Vinay Rajani, the Senior Technical and Derivative Analyst at HDFC Securities, who joins us on the show. Hi, Vinay. Good to see you, Vin. Market's a little under pressure. How would you trade the index?
Yeah, good morning. Yes, definitely there is some pressure and profit booking is going on. So after 800 points rally from the lower level, Nifty gave respect to the 61.8% retracement of the entire fall, which we saw from 25,670 to recent low of 24,337 level. So 61.8% retracement is a golden ratio. So it has given respect to it, and after that it is into a profit booking phase. Now the support comes in at around 50 days EMA, which is placed around 24,850 odd level, and there has been also a swing low there. So there is a strong support around 24,850, around which Nifty could again find support and bounce back. So overall, we feel that Nifty is looking strong. On dips, one should accumulate longs, and support level is placed at 24,850. That is the level we are waiting for. Around that, we can initiate a fresh longs in the Nifty. Overall, we feel that this recent high of 25,150, 160 will be taken out, and we will be further head towards the major resistance of 25,700. So overall view is bullish, accumulate on the dips, and the support level is around 24,850. So this is our view, and so stock specific bullishness will continue to be there.
Okay, all right. What about, tell us about individual stocks?
Yeah, so basically I can see some strength building in defense space today. So Hindustan Aeronautics, HAL, which is hovering around its 200 days EM and trying to take support there. So I think HAL can bounce back from here. So HAL around 4511 can go long. I would suggest a stop loss at 4420. On the upside, I'm expecting a target of 4650 in next couple of sessions. The second pick I would take from the pharma space, that is Mankind Pharma. So there's a clear-cut breakout on the charts, and there has been a momentum in the sector. Healthcare pharma sector has been performing well for last 2-3 trading sessions. So Mankind is one stock which I like from this particular space. So around 26241 can go long. I would suggest a stop loss at 2575, and the target we should keep around 2700.
Okay, all right. We'll leave it on that note. Thank you very much for joining in with a quick perspective. So slightly sluggish morning for equities, at least so far. Let's put the spotlight on commodities now. We have Manisha joining in. Manisha, what's on your radar?
I'm looking at copper prices because we've seen constant declines onto this one. Remember, when you look at the month of August, from its highs, the copper prices have declined by almost 27% there. But we did see all-time highs as well. And this is before there was clarity on tariffs coming in from the U.S. market. So as of now, we understand that the refined copper is not tariffed. Well, the first thing on my radar clearly is what happened in U.S. yesterday. And Trump has criticized court decision that has temporarily blocked land transfer to big corporates, mining companies like Rio Tinto and BHP as well. In the last 24 hours, we've seen pictures and a lot of statements coming in from the CEOs of these two companies and the U.S. administration as well. Well, just to give you a background, Rio Tinto and BHP have been jointly pursuing the Arizona project for nearly a couple of decades now. So that is what the U.S. president seems to be pushing right now. And dispute has added to volatility in sense of prices, forward guidance, etc. So this is one thing to watch out for. And looking at this, we've seen some pressure come in for the copper prices. The second thing is about the U.S. administration really increasing or broadening the circle when it comes to tariffs. So that 50% tariff is now on imported manufacturing goods as well, containing many of these metals, so whether it's aluminum, copper, steel, etc. And that seems to be bothering the street as well, looking or assessing right now on how many products would it matter to and what really would the impact be to the U.S. consumer there. At this point in time, when you look at the U.S. imports itself, U.S. imported 810,000 tons of refined copper in 2024. This is all unprocessed refined copper. And these are the numbers for 2024. 25, of course, is going to be on the lower side because whatever imports that we have seen have happened anywhere between January to June. Then U.S. imported 45% of its domestic consumption of 1.8 million tons of refined copper. So that's a big number and is expected to impact the markets there. The third important thing, of course, is the strengthening of the US dollar index. It's trading 0.5% higher in the overnight markets. And this is ahead of the Jerome Powell speech at Jackson Hole. There's lots that the markets are getting into with that speech on what could really come in. Was it going to be a power-packed one, or is it going to be a non-committal statement from Jerome Powell? So that really seems to be finding its way in markets. As of now, the agenda clearly is that Powell will speak on economic outlook and the Fed's policy stance going forward from here. Fed has kept its rates unchanged since the month of December, but there is now a 70% possibility of a 25 basis point rate cut for the month of September, and that's exactly what seems to be getting baked into the prices. But all eyes on Jackson Hole at this point.
All right, Manisha, thank you very much for that. So that's commodities in focus. We're going to slip into a quick commercial break here. More on markets, but specific stocks which are moving around. Stay tuned. Coming up.
Welcome back. So quick check. Like we've been saying, it's a bit of a sluggish day, 100 points down on the Nifty. But the good thing is that it's not like it's a non-stop one-way decline. There is some sense of buying at lower levels as well. And the mid-cap index is now flashing green. On the large cap screen, I just want to point out Hero MotoCorp. That's the weakest stock on the Nifty right now. The cut of almost 2%. That's something that really stands out. And then, of course, there is R Systems. And we've been talking about that stock right from our top 10 segment. The company has gone ahead and made an acquisition. And the market seems to be giving it a complete thumbs up on the back of that. There's Apollo Hospitals also, which is in focus on the back of that large trade that happened. In fact, let's focus on Apollo right now because we have confirmation now. It is promoters who've sold off a little bit of their equity. Vinny, tell us more.
Yes, so we have seen that, in the morning trade, we saw Apollo fall and now that has recovered. Why? So we knew Sunita Reddy was selling stake in the company. They informed exchanges that Sunita Reddy has sold around 18.97 lakh shares. That is amounting to around 1.3% stake. This is at a price of 7,850 rupees, 1% discount to yesterday's closing price. But the important thing is that why the stake sale is coming in to reduce the pledge in terms of the holdings that's there, right? So after the stake sale that comes in from Sunita Reddy, now the pledge holding of the promoters post this transaction will reduce from 13.1% to 2%, and that is why that recovery that we saw coming in the stock from the day's lowest point. So keep an eye out on Apollo Hospitals. This stake sale is not for any personal reasons. The promoters not selling stake for personal reasons, but for reducing the pledge. That is the main reason.
Okay, all right. Thanks very much for that, Vinny. So keep an eye out on that one. PTC Industries is the other one, which sort of opened sharply higher. Ria is here with details. Ria, morning.
Well, good morning. PTC Industries is up around 7 to 8% today after bagging an order worth about rupees 110 crores from BrahMos Aerosystems for the supply of critical titanium castings. And the execution period for this is about 24 months. Now, just looking at PTC Industries in terms of the performance in Q1, the revenue had more than doubled to rupees 97 crores, but we've seen a very sharp fall when it came to the operating profitability. EBITDA margins had contracted by around 1,237 basis points, coming in at just about 9% in this quarter. And this profitability was largely impacted by significantly higher employee expenses, which were at 35% of sales versus just about 17% of sales in Q1 of last year. Now, coming to the outlook for the company, they do aim to achieve a top line of about rupees 750 crores in FY26 and 1,700 crores in FY27 versus just about 308 crores that they saw in the last fiscal. They also said that they are comfortably placed on the order book and they're expecting margins to be in the mid to higher 20s in FY26. In the longer term for FY29 to 30, they are looking at about 2,500 to 3,000 crore in terms of the top line with a 30% margin. So the outlook remains strong for the company, and on the back of this order win today, it's up around 7-8%.
All right. Thank you very much for that, Ria, with details there. PTC doing well. We'll take a quick commercial break. Another one special segment. It's the economy. Lata in conversation with S. Ganpati of Gokuldas Exports. It's a management you must hear from in terms of the tariff impact, etc. The 25% additional duties go into effect coming Wednesday. If they do. Sudheer Sekhri of Apparel Export Promotional Council, of course, also a very important voice there. Lata in conversation with both of them on the textile space in just a bit.